Good morning. It's Thursday, October 31st. Happy Halloween. So about 6 a.m. Central Time. Overnight, the precious metals are weaker after a mixed trading session on Wednesday. What did we see on Wednesday? ADP was stronger than expected with 233,000 jobs created versus 110,000 expected. What did that do? That weakened that gold market. It took it off of its all-time highs. About 15 minutes later, we saw weaker GDP data, which showed that the economy grew at 2.8%, falling short of the 3.1% that consensus was forecasting. And what did that do? Boosted the gold market. So the point is to show you how economic data can oftentimes drive these markets and give you the ability to add and reduce positions without having to wait for the cash open. That's why it's very important to have a futures trading account. Some other standouts here from yesterday's trading session. We did see the U.S. equities under pressure, and they are continuing to be under pressure here right now. We've got the NASDAQ down about 1%, the S&P 500 down about 0.75%. Why is that happening? Well, we saw Meta and Microsoft. They reported after the bell. Microsoft is down about 3.5% in early trading after the company forecasted slower cloud revenue. Now, what else happened yesterday that was a big standout? Crude oil futures had rallied, and this comes on the heels of a possibility of a potential Middle East peace agreement. So why would crude oil be rallying? Well, a couple things here that we identified. One, we had bullish EIA inventory data. We only saw 510,000 barrels here as a drawdown, so those were being extracted from the inventories versus a 1.5 million barrel build. There's also speculation that OPEC may delay its production hikes. So remember what we talked about before, that crude oil in this range in the mid 65s, we see that as a value zone. So many of you had put on farther dated crude oil contracts because remember, crude oil futures are trading in backwardization. So there's your futures term of the day. That means that futures contracts are cheaper the farther you go out. The opposite of that is a contango, where prices are more expensive the farther you go out. So a couple things here to note. Looking at the overnight price action, you do have December gold at 27.92. So the high of the overnight session, 28.01. We'll want to keep an eye on that level here. Really want to see that breakout over that 2800 level. It's going to take some economic data to really drive that thing up through that roof there. The low of the session, 27.84. Close in support right around this 27.80 level. Then it goes to some whole numbers, 27.65, 27.50. You don't want to see that market really trade below 27.50 because remember, that was that consolidation zone that we saw for so long happening. Now, silver futures, a little bit of a wild ride here, down 1.19%, 33.66 last. That's down 40 cents here. Also, the copper market at 433, so that's down about 130. And also, you got platinum down $9.50 at 1,012, and the palladium at 1131. So we'll be eyeing that platinum market, seeing how it trades right around that 1,000 mark here. See if that old resistance is now new support again. So some overnight news that came out here, and some really important news because it's going to drive the currency markets, which drives the precious metals markets. We saw the Eurozone CPI, that's our inflation index. It rose 2% from a year ago, up from 1.7% the previous month. So that weakens the expectations for that larger interest rate cut that they were expecting. So you got the euro currency hovering right around the highest level since October 21st. The key level to watch on the euro, 109. So many of you working with me are long euro currency and also long euro currency call spreads. Not a recommendation out to the public. That's something that our people are working with as on a client basis here. Now, if we do see the euro currency break out over 109, what should happen? Because of the inverse correlation, the dollar index should come off. The dollar index comes off, what happens? Gold futures oftentimes get a boost, and with gold futures rally, that could be a next support effort into that silver market. Other things that we're watching here is copper futures. They are stabilizing here. We did see the Chinese economy show signs of stabilizing after factory activity had expanded after contracting for 5 straight months. You really want to see copper futures lift up. You want to see the Chinese economy start to rise. And what will happen is that will spill over into your silver market and lift it up from here. We're also seeing a drop in Chilean copper production. So 2 levels to watch on the copper market. Close in support right around 429. We don't want to see that market break below that level, but we do want to see futures rise up to 445. Well, that would be a breakout. So we do have a lot of economic data. So again, very important to watch this data come out here. We will have the core PCE reading along with Friday's October payroll report tomorrow. That's really going to drive the Fed's interest rate decision on November 7th when it ends its 2-day policy meeting. Note on this is that typically we're seeing a Tuesday, Wednesday meeting. Now we're seeing here a Wednesday, Thursday due to the election. So that next Fed meeting is going to be on the 7th here, which is Thursday. We will see the initial claims data come out here today. I don't think it's going to carry that punch that it has here in previous weeks because of the fact that we're so close to that employment data coming out tomorrow. Also tomorrow, you're going to want to watch that unemployment rate sitting right at 4.1%. So back to the gold market, kind of my line in the sand right now, 27.34. Don't want to see it trade back below that level. That'll take it into a neutral stance here, and we'll want to wait and see how that drives the market. Silver, right around that critical level of support, 33.26. You don't want to see it break below that level because that would break down through the lowest level here since about the October 18th high. That's when we got that massive thrust upwards. If we start to chew into there, prices might have a much farther setback. So we might want to look at some cheaper put options here. Just some cheap insurance. We're not bearish on the market, but we do all have insurance on our cars, our health, our house, everything else. So cheap insurance is what you want to look at here today. So you got any questions, you give me a call, 312-858-7303. You want to open up a futures trading account, reach out to us at info@bluelinefutures.com. Good luck, good trading. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.